Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. And I want to thank everybody for coming in today. It's about, it's almost noon on Saturday, the 24th. And we are looking at a chart of the S&P 500. And now we've had 4 really strong weeks in a row. The market's looking very strong. The indexes look very strong. Let's put it that way. A large majority of the market is not participating in this little rally. Basically, your stocks like Apple, Google, Amazon, those kinds of stocks are pushing these markets to these highs. It's much higher than I would have expected it to be. One of the things I was looking for is anytime you come down and you make a low like this, it usually gets retested and usually makes a lower low. In this case, it made a higher low, which is unusual in the market when the trend changes. Now, that's assuming the trend's changed. Maybe this trend has not changed. It's also very unusual to have this kind of sell-off and a major break of a trend line and all that to happen without a trend change. So we're kind of in a unique area here a little bit. I did put this red dotted line in to show that we're right at this diagonal resistance that touches this low, this low, this low, this low, and then intersects this big down day we had. You can see, and this is also very common for the market to break a level of support and then to retest that level of support and either go through it or roll over and bounce from it to the downside. So that's where we are right now. It's very difficult. Now we've closed some gaps. There was a gap here. There was another gap up here. We've closed some important gaps, and gaps always get filled. So maybe this is just something the market had to do before it resumes to the downside. But it's very unusual. If you step back and you look at this trend line was intact for a long time, and we sliced right through it like it was not even there. That's very unusual to do, and then turn around and totally recover like it didn't even happen. So I think that piece of evidence, plus the fact that the vast majority of the market is just not participating in this rally, are two very important parts you must not overlook. The great thing about this rally is it's given you an opportunity to kind of sell at better prices if you do feel like this is a sell-off and a potential trend change. We're still well below the highs up here, and so in order for this not to be a trend change, we would have to, get up above these highs up here where this box is. So I think the odds are still that we have a trend change occurring here, but it's really putting you to the test if you believe that. It's putting me to the test anyway. So interest rates kind of rallied here toward the end of the week. We've got this little consolidation pattern going on here. We could get one more low and then a bounce, or it could be over. It's kind of in no man's land. There's a lot of things that are kind of in no man's land right now. Very difficult to tell. And that's typical where you have these big inflection points, where you're changing from a downtrend to an uptrend to a downtrend, those kinds of things. So it's very common to have this kind of uncertainty at places where the trend is trying to change. That's why it's not a very good game to pick bottoms or pick tops. It's very difficult to do that, and as you can see, the market, it's a process that the market undergoes. It's usually not an event. Now, back in 2009, when we hit our 2009 low, it was kind of an event. If you go back to the S&P 500, I mean, that's 1 month, but let's look at a week. I mean, basically within these 2 weeks, and within a 2-week period, the bottom was put in. So if you look at a daily, I mean, you're really talking about, maybe this whole pattern right here, is kind of this bottoming pattern. You had a bottom, it came up, went down lower, and then came up. So you have kind of a W. I don't know, can everybody see that? Maybe I should. This is pretty common when you're looking for, inflection or bottoms or tops in the market. You get what's called a W pattern. So the market tried to bottom right here, okay, first, took off, pretty strong, but then sold back off, made a slightly lower low. This is what I was talking about with the low we had on August 24th. This is very common where you get, pretty good sell-off, a little rally, and then it retests those lows, and a lot of times we'll go a little bit lower, and then you take off. So this is not uncommon to how bottoms form. Bottoms form a more abruptly, I guess is a good word, than tops do. Tops are the reason tops take so long to form is because people aren't giving it up easy, right? I mean, people are still bullish, and one by one people drop off and become bearish. And even with this big down, you still had some people going, "Oh, thank God, this is the pullback. This is the correction we've been looking for." So tops are more of a process. Bottoms are a lot of times more of an event. So the euro sold off this week. The European Union, Draghi, came out and said, "No, we're not done with QE. If we need to do more, we'll do more." So the euro sold off, broke out of this pattern, and is likely on its way to something lower than this 105 area, something just below that. Again, a W is trying to form a W bottom. And then we'll probably get a pretty strong rally in the euro, but look for prices to go below this 105 first if you're trading the euro. Let's see. Let's look at the NASDAQ composite, because if you look at the NASDAQ composite, see how much stronger it looks? It broke these lows with this low here, but man, it's real close to its highs. It's not that far away at all from its highs. And if I was to pull up the NASDAQ 100, it's even stronger looking. And the reason that is there's 2,500 stocks in the NASDAQ composite. There's only 1,000 in the NASDAQ 100. 100 in the NASDAQ 100. And so that speaks to the narrowness of the market. I could pull up the QQQs, which is the NASDAQ 100, and you can see how close it is to its high. And that speaks to the narrowness of how few issues are really participating in this rally. And we could go through, the S&P 500, and you can see. Now, one group that is participating somewhat strong compared to where they've been is like the oils. So ConocoPhillips, ExxonMobil, Apache I think is still pretty weak. Yeah. I don't know. There's a bunch. Chevron's been looking pretty good. I mean, that's a pretty good bounce. I don't know what that is right off the top of my head. We can measure it. From here to here in Chevron, you've had a 22% bounce. I mean, that's a pretty good return on any given year. That's a good return on a stock. So, we've had basically oils and then a few mega cap tech stocks have been really driving this rally. APL, Apple. You see Apple looks pretty strong. Amazon, I think, looks really strong. Yeah, see, Amazon's making new highs. What else did I say? Google, GOOGL, which is now Alphabet. You can see it's making new highs, or it made new highs this week. So you've got a very narrow market. The biotechs, or the IBB, is still way down. This is the biotech. Also, if you look at XLK, which is the technology sector ETF, you can see it's at new highs. So basically your big cap tech and your oil stock companies and oil services companies like Halliburton, Schlumberger. Well, Halliburton still looks pretty low. Schlumberger, I think, is a little bit better. Yeah, a little bit. But it's just a very narrow market here with this rally up. So, and the VIX just got crushed. I mean, since we were looking at the S&P 500, let's look at the VIX real quick. Volatility S&P 500. I mean, I really didn't expect it to get below this blue trend line here, but I mean, you can see it's just gotten crushed. So usually when you have this kind of drop in volatility, it's just a matter of time before we get a pretty good spike up. So I don't know if that'll happen this week. I'd say the odds are pretty good for it happening this week, but we just have to watch the market and see what's what. Now, I was looking at some of my forecast stuff that I subscribe to, and you can see here they have the same line drawn here, and they've said that this is a 78.6% retracement, and there was a gap filled there. So that's pretty much the same thing. Now, this kind of speaks to what I was talking about earlier about how narrow the market is. You can see the volume. This whole run up here, the volume was declining in the stock market, the 10-day moving average. And this is usually not a good sign because, again, it means that fewer and fewer stocks are participating in the rally. And when the breadth is not wide, the rally's not experienced by the vast majority of stocks. Usually it's temporary, and usually it's some sort of head fake, and you're likely to get whacked pretty good from that. Now, let's make a couple of assumptions and talk about where this could go. The thing about it is the way this rallied. I mean, had it ended here, so let me zoom in here, and I have reasons for this, and I'm not going to go into it here. But had the market ended right here or thereabouts, and then rolled over, I think you had a pretty good chance of finding support around this 1800 area. But now that the market's gone so much higher, we could be at a different point of the trend. And you've heard me talk about this before, but when you have a large move down and then the first correction to that move, the next move could be quite large. And I mean, it could be, let's see where the next level of support is. It could be well below this, and maybe even as low as this line right around here, so 1600. So, the reason I bring that up is because if you're in the camp of, I don't know, I don't think maybe this market's rolled over just yet, just know that your risk to the downside could be pretty large. I mean, we might not stop at this pivot. It might just blow right through this pivot and go down to like 1600 or so. So just a heads up there. There's no way to know that. I mean, I'm not saying it's going to do that or anything like that. I'm just saying, given the way this all unfolded and we didn't get a lower. So just to be clear, what I was looking for. Well, let me zoom back out because that's not good. What I was looking for and didn't get is some sort of move. Let's say these last 2 weeks didn't happen and you got a slightly higher high here, and say from right here we started to roll over. Well, then I think you had a pretty good chance of this going down into this area right in here. And so here's your W, right? Your W bottom, boom, 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 and then rally. Well, that's not what we got. So what I'm saying is, because we didn't get that, the probability of this now going much deeper than that level of support I have drawn has increased. So it's just something to be aware of. It's not anything to be afraid of. It's just something to be aware of, that the speed with which this happened, it could have unfolded differently at a different time scale. Like if we look at say a 6-month chart, And the other thing I've talked to you about before, and I can just look at that right now. If you go to like the futures, and we look at, let's just look at the daily. If you were to look at this low went much lower than the cash market. So the cash market ended right about here, and this market went much lower. So you know, what you end up getting is this low here was lower than this low if you look at the cash market. You almost have to kind of merge the cash market and the futures market together, and then you could get a different picture where this could retrace to this level. This is a pretty deep retrace, is all I'm saying, and if we're still in a downtrend, the next move down could be pretty significant. Let's look at gold. Gold, you know, has been trying to lift here, and it just cannot get above this downtrend line that we've got here. It tried, and it's struggling a little bit. And you can also see we're at the top of the MACD. So, you know, you might get a little bit more of a pullback in gold and maybe a rally from there. Now, silver's been a little stronger. Usually, silver and gold track pretty well together. But you can see silver, well, it's hard to see here, but trust me, silver has been much stronger, and it's already crossed under its MACD. Now, it may find some support here and then rally and go up from here. And if it does, you're looking at silver being around $18 or so, way up here, before running into any kind of resistance. All the markets around the world are pretty much moving together. It's not really necessary to look at Germany and Japan, and I mean all this QE money spending, money printing is basically causing all these countries to kind of move together. Even Japan rallied a little bit this week after not just this week, the last couple of weeks, just like we have. So. You know, we need a few more cards to come out of the deck is what we need at this point. And right now it's just hard to say. I say there's massive resistance right here. We are at massive resistance. So that doesn't mean the market couldn't chew through this resistance and break out to new highs. It just means that there's going to be some good stuff happening to chew through this. And we had some good stuff happening, right? But a lot of these, you know, Google shares went up on a buyback news, and they made $7 a share, which is a lot. But then they also said they're going to buy back $5 billion worth of stock. And you just got similar things going on in other parts of the market. So to the extent that can provide positive feelings to buy more stocks, then we could chew through this resistance and break out to new highs. The thing I keep getting hung up on is this was a heck of a move right here in just a very short period of time. Really, in 1, 2, 3, 4, 5, 6 days, the market lost. I mean, it's just unusual. I mean, there's only been a couple of times in history where it's done that and didn't result in more bad stuff. So that was an 11.25% sell-off from high to low just in that 6-day period. So very unusual. Certainly feel like we should give it some respect, but at the same time, we've had a strong bounce here. So we just have to keep our eyes open, wait for a few more cards to come out of the deck, and then maybe we can get a better handle on the direction here. Okay. All right, everybody, that is it for this week. You know, come to the YouTube channel. Obviously, you're listening to it, but, you know, copy the link, send it to your friends and family. You can follow me on Twitter. I haven't been very active on Twitter, but occasionally I post an article I think that's important. I post a lot of David Stockman stuff. I think he's probably the most prolific and accurate guy out there right now, putting out a lot of information about the economy, about the markets, and where it's likely headed. And you can follow me there on Twitter at InvestorClass. All right, everybody, thanks for coming in this week. We'll see you next week. Take care, everyone. Bye-bye.